Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. In the last 24 hours, the Australian dollar has been slightly mixed. Since it challenged the highs of 76.65 yesterday, we did drop back to the low this morning of 76.15 before slightly bouncing. In the technical perspective, I believe the market is struggling at these levels, and as it contracts to a bearish slight view into the intraday outlook, we could see a move back to the lows, but we still need to take out the support at 75.95 to reinitiate the downside. Until we get that, and then the market may test towards 76.60 to 77.40. But do be on your guard. If we do get a strong return in the US dollar, then we should see further weakness returning to the Australian dollar. Yesterday, the RBA kept interest rates on hold at 1.5%, this being the 20th consecutive meeting. As the RBA last looked on a 25 basis cut was in August 2016, which was easy to an easing bias. Nevertheless, the RBA governor feels that he has maintained both the domestic and global economies were gaining strength. So I still feel a little bit disappointing that they didn't reveal more to the hawkish outlook, which is, I believe, the market will eventually come to. Euro has popped now slightly to a stronger stance, with the US dollar index weakening slightly, but not broken down as of yet, as it maintains above 93.40 after posting a low of 93.73 overnight. At this stage, we are looking to a challenge of 117.45 to 75 to the euro. And then I do expect to see a rejection from there and look back to the low region of 115. If we do break above 75, then it will be time to reassess and see where the market can actually go from there, because that would mean in turn that the US dollar index may have broken beneath the 93.40 level. The dollar yen still maintaining a slightly bullish stance after the last four candles. You can see still very much holding to this bull trend. At present, though, we still need to clear the resistance of 110.05 to see the next, or initiate the next move to 110.55, which I believe the market will possibly show some resistance, and also to the fact of some profit taking from the longs that was probably been established from around the 108 region. The pound has grown stronger overnight and closer to my objective now, 134.50. With dips still to be shallow, I do expect to see 133.80 to hold as a short-term base and eventually reach its objective of 134.5 and reassess from there. The gold outlook rallied $11 overnight after rejecting the level of 1,288. It still has a bit more work to do on the upside and claim the region of 1,367 to promote a bullish outlook. Overnight, there was slight concerns about the China and US trade wars, but this has given a slight uptick to the safe haven demand. But nevertheless, the market still, from a technical point, doesn't like to be short towards that 88 region. As you can see, over the last consecutive 8 to 10 days, the market has rebounded quite well from there. It would seem that oil is attempting to recover since the break of the flag and also the break of the uptrend. Nevertheless, this to me is just a retest to properly the trend line, which comes in roughly around 66. Overall, though, the market is still destined towards the region of 62.40.80 and reassess from there. But that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.